Welcome to the Market Momentum tutorials. This is number 4. There's a total of 8 plus 1 extra on the Live software. This one's on momentum gaps. And when you watch all of these, please come to the website and watch the video reports. You'll learn a lot more from that, and you'll find trading levels that you won't find on normal charts.
Now we're going to talk about inside outside momentum days with a momentum gap. This is a classic normal end of move scenario we get sometimes, and I haven't got the values like I showed in the other two, but we can work them out because it's $10, $20, $30 above the neutral value. And on this particular day, I remember it well, the market opened right just above the momentum line, and you would have bought it on that momentum line because you had a momentum gap. It opened at plus $6 over neutral. The momentum gap was at plus 13, so there was a $7 gap there. You'd have had a little stop below the momentum line, and you could have rebought it if it went back above the momentum line. But in general, we were expecting it to fill. It did. It also went up and hit the momentum line at the top, and then reversed back down because the low value had been broken. However, in this case, and I'm going to remove this to show you, and we're just going to zoom it up. You can see here the high value broke the inside day's high value and then reversed. This is a classic end of move signal. It happens on the day or on the week when you get them, and in this case it took out the high value and then just reversed. It held this momentum line again briefly before slicing through it, and the next day went slightly further. In fact, worked out to be a $37.50 move over 2 days. Nice if you can get it. As I say, doesn't happen all the time. This next example is the cable sterling weekly range. I'll zoom this one up. Again, this is another outside inside day. We had a momentum gap here. It only looks like a small little momentum gap, but on one of these bars is worth 40 ticks, because this is 2 cents, 4 cents, 6 cents, so 6 cents is 600 over neutral for a cable. It opened, you could have done a quick little opening trade, 40 ticks, but the fact is it went all the way up. It broke both mom lines. You've got to look at these little inside days as miniature triangles. If you watch the video on triangles, they'll behave just as well. Took out the high value there and reversed, and in this week it moved from plus 760 to plus 40, so a 720 tick move, 7 cents down in the week, reversal, end of move, classic end of move signal again, and it went down a little bit further I think the next week, as you can see here it opened with a momentum gap down the next week. It slid off further, finished its move, and then reversed, filled the momentum gap, and in fact did a momentum reversal. So you've got an inside outside day there, a momentum gap and a momentum reversal, all in 3 weeks on this particular chart. Now the last thing I want to talk to you about momentum gaps is why they don't fill, and in this we're looking at the S&P 500. And this is actually a rare chart because I probably said to you at the beginning that stocks and bonds in particular, momentum gaps fill 95+% of the time. You know, you can sit with it all day long, but it will fill by the end of the day. And depending which way the diff's pointing can guide you. Where it doesn't do it straight on the opening, then you might have to wait to the end of the day for it. But when a gap's at a very stretched level, and it's like an inside momentum day like that, especially on the S&P at plus 20, minus 20 for example. If you watch the video on momentum waves, we talked about stretch levels, and this is a stretch level on the S&P, and for momentum gaps anything over plus 10 on a daily chart is a stretch level for a momentum gap, and I generally don't expect them to fill, but they're rare. And the rare thing about this chart is actually that was a 10 plus momentum gap, but we have quite a few little unfilled momentum gaps over this 4-month period. As you can see, there are a few of them. There's another one there. Now that's a lot of unfilled momentum gaps which on stocks just don't see. And I mean, I've been doing this this system for 15 plus years, and this is one of the first 3-month periods I've seen this many unfilled momentum gaps in it. And the reason I'm explaining this to you is because to show you, one, things are never 100%, nothing's infallible, nothing's perfect, and things do change, and they change back. And this particular period reflects the quantitative easing period, where we've had jerky, erratic, short movements up and up and up on the stock market, and this is one of the results. You won't see this amount of momentum gaps on the Dow chart though, because that's got a much higher volatility, and even with QE we didn't have the same problem. Now, one other thing though is that when a momentum gap remains unfilled, usually it fills it within 2 days, if not the next day. Here you can see it filled it after 2 days, albeit it would be at different market levels, but it filled the gap. Here again, it took the second day to fill it, but it filled it. In this case again, it's the second day that filled this gap. And again here, the second day. So usually 1 to 2 days after that momentum gap's filled, although we've recalculated and we've got completely different values on neutral and stuff, and it doesn't reflect the original momentum gap necessarily, you will find that it will go in that direction on a momentum bar within 1 or 2 days. So you can still trade that gap from a different point of view the following day. Now the last thing I want to cover is inside days in general, and really, as I said earlier, you should treat these like triangles if you watch the triangle video. And you have 2 momentum lines on these, and we always have 2 momentum lines, but you know, we have, for example, an upper momentum line and a lower momentum line, but I will talk about those on the proper video for them. But just to first to say, inside momentum days, you can't rely on them. They're like a triangle. For example, they break out and they slam back inside and reverse the other way, and do all sorts of things. It's just that you cannot rely. You can see this line broke one of the momentum lines, which is the downward momentum line, which was the main momentum line, but it held the upward momentum line. 50% of times the lines will work, 50% of they won't. And really all I want to say on this matter is that you just have to be wary of inside momentum days. And when we get momentum gaps, we prefer to have normal momentum gaps without inside momentum days, although they can produce end of moves trades, which are wonderful, and you can usually tell those by where the diff is. If the diff's in a stretched level and you've got a momentum gap and an inside momentum day, and the diff is stretched and turning, then you definitely want to sell that momentum gap and keep selling it as it goes up, even if it goes higher, because it's going to have possibly have an end of signal move and reverse back down and get a good trade out of it. Anyway, that concludes the tutorial on momentum gaps inside and outside momentum days.